James, let's start with iron ore. We got to talk about that. I mean, we know what's happening with the equity market over in Australia. That pushed a record yesterday. What's driving this latest push higher above $200 on the price, and how far can it go?
Good morning, David. Well, yes, quite astonishing gyrations in the iron ore market. Yesterday, we had a 10% gain on the Singapore futures market. You could say it's trading more like a cryptocurrency than a base commodity right now. And as you just mentioned, we've had a bit of a pullback this morning. I think certainly some speculative activity was driving it yesterday. We had the Daily and Commodity Exchange last night announced that they're going to impose some trading restrictions. I guess mindful of that, and that's what's caused that pullback. Higher margin requirements and trading limits imposed on that market. But underlying that, I mean, the reason for the strength in iron ore it has been fairly well documented. Part of it is Chinese steel mills front-running their demand for ore in expectation that the authorities will impose tougher environmental standards and curb production of steel later in the year. So we have seen a certain amount of front-running there. Also in the background, you've got those deteriorating diplomatic relations between Beijing and Canberra. Of course, Australia provides the bulk of iron ore to the Chinese market, which puts Beijing in an uncomfortable position in relying on that market when they're trying in other areas to sort of curb Australia's economic influence in terms of the commodity exports it sends to China. But of course, they're limited in their ability to substitute that iron ore from Australia because it simply isn't the bulk that you can get anywhere else. Brazil, the second biggest exporter of iron ore, is struggling to meet the supply requirements itself. So they're really stuck with Australia for now, and that's what's keeping this price so elevated.
Yeah. James, probably connected to this in the copper story, which we'll get to in just a few seconds here. Let me just break the yuan fix for the day for our viewers right now. So, yeah, I mean, we are again on the weaker side of estimates. You're going to see the bottom of your screens there, 32 pips on the weaker side of estimates on the daily midpoint of the currency. Keep in mind the backdrop here is dollar onshore, 3-year highs in that. We're very close to 640 on dollar offshore as well. James, let me bring it back in. Copper, China's a big part of that story. People talk about demand. I'm looking at numbers. I'm hearing numbers, 13, 14, 15,000. Is there anything that can stop this copper rally?
Yeah, I mean, all the technical indicators are flashing red at this point on this copper rally, and very much in overbought territory. I think we're going to have a pause at some point before the market looks higher. But the long-term demand fundamentals are well documented. You know, you've got this thematic of the clean energy transition, which to a large extent is based around copper feeding a lot of the things that go into that transition. The electric vehicles, the wind and solar turbines, that sort of thing, all need copper, and that long-term demand thematic is really driving the market. You've also got on the supply side of the ledger, trouble there meeting that demand. I was just talking to an explorer down here yesterday. So just simply there aren't the huge copper resources we need coming on stream because we've had a dearth of development and spending on new projects recently. So that's also holding back the market. So yeah, short term, I think we might have a dip back, but longer term, we're looking higher in copper.